Why is the stock market going up? Why is it completely disconnected from the economy, where everything is going down except unemployment, which is going up? Surely the stock market should be crashing alongside all the smaller businesses as well. The reason for that, I'm going to get into detail on it shortly, but a quick answer is that the reason that is not happening is because of stimulus. So all this stimulus that's being created, the monetary supply has been increased by 30%. It's staggering, 30% just in the last year alone. So if you think how many decades it took to get the monetary supply to where it was last year, and then this year for all the stimulus creation to boost it by another 30%, it's absolutely insane. So all of this money is going into hard assets or the stock market or housing. You'll probably notice how the housing market is just booming right now because of all this extra money and stimulus. When you have historically low interest rates, just like we have, not just in the USA, but all over the world right now, this creates a bubble. When you have easy credit and easy access to credit, almost 0%, there really isn't any risk for individuals or companies to take on debt. So what do? They ramp up their debt to the absolute maximum, not realizing that when we're in a recession or a crisis like this, there is only one way for things to go, and that is down. But at the same time, it means there's only one way for interest rates to go later on, which is up. So this just compounds the problem and makes it even worse. But the biggest problem that dwarfs all of this combined is something called share buybacks, which I'm absolutely staggered that this isn't all over the media, all over the news, and that other YouTubers aren't talking about this day and night. Share buybacks, the worst possible thing that could ever happen to a stock market. And for this very reason, they were made illegal up until 1982. And if you ask many economists what caused the 1929 Great Depression, they will say that the huge crash was caused by share buybacks. This is where a company borrows money, well, it's really currency, but I'm just going to call it money for simplicity, at historically low levels. They then take this money and do they invest in R&D, research and development, improvements to their efficiency? Do they try and bring costs down in the company? Do they try and incentivize employees or recruit or headhunt some of the best employees from other companies? No, they don't do any of that. What they do instead is they buy their own shares, which what this does, it inflates the value of the share. It's artificial. It's what I would call smoke and mirrors, like a magician would do. It's a trick. They inflate the share price of their own shares, thereby reducing the equities and making their company look much better well run, and much more profitable than it really is. So of course, when the average person, and even some of the professionals as well, look at that company or look at the stock market as a whole, they say, wow, the stock market is rallying, it's really doing fantastic right now. But if you apply common sense and logic here, obviously the stock market can't be doing well. How can the stock market, which remember is an accumulation of all those companies, how can it be booming and doing well? How can its value be going up when the value of those companies is going down because they are losing profitability and many of them are taking historic losses in the billions of dollars? How can the stock price be going up? Again, it's being artificially propped up. This is all fake. It's not real. And something like this can only go on for so long. You only have to look back in history at previous recessions and you'll see a repeat of things like this going on. And one thing that really annoys me, and it should annoy you as well, is that rather than these companies using this liquidity, their spare cash, and saving it for a rainy day, for a crisis like we're currently in, no, they do their share buybacks. And then what do? They ask the government for a bailout. That is absolutely disgraceful and scandalous. And worse than this, some of the stimulus money, some of the bailout money was actually used by these companies to do share buybacks. And now they have a cash liquidity crisis. They want the government to bail them out. And remember what I always say in my videos, the government doesn't make money. The government only gets their money from taxing. Basically, they're taxing you and I as citizens from our income. And then they're using this income to give it to bail out these big companies and the banks. Just like '08, the banks and the big insurance companies were bailed out by taxpayers. So overall, these companies are in big trouble because, like a bad gambler, they didn't know when to quit. They just kept going until a crisis has come, and now they have no way out except a bailout. Not least of which, and this is a really controversial subject, the Federal Reserve buying assets. Yes, you did just hear that correctly. The Federal Reserve is buying
assets.
And you might think, well, how can they do that? Is the Federal Reserve a government institution? No, it's not. It's a private institution. They create money out of thin air and then they loan it to the government, to commercial banks at an interest rate. So why is the Federal Reserve allowed to purchase all of these big assets and treasuries and bonds? And this is the crazy thing, and you can fact check this if you don't believe it. As of this week, the Federal Reserve, a private institution, owns over 1/3 of all mortgages in the United States. So that means that 1 in every 3 of you watching this right now, the Federal Reserve
owns your mortgage.